What is up, guys? Pakion FX back again with another video. Super grateful again for your subscriptions, you guys. We actually just recently crossed the 100 subscriber mark. I mean, this thing just started as a joke, but now we are here, and I've been receiving a lot of comments and a lot of inboxes from different people, and just saying how these videos have been of help to them. So honestly, I am super grateful, and I'm hoping that you guys are going to keep it locked, because I'm going to be uploading even more content that relates to the Forex market. So just straight into the today's video. So today's topic, I wanted to talk to you guys about how to deal with red days in the market. By that I mean how to deal with losses, because what you'll come to know, what you'll come to understand once you've started trading is that losses are kawaida. It's a normal thing to incur losses on your trading as well as profits. You just make sure that your losses are not as much as your profits, because at the end of the day we are here to make money. So I'll just show you my records for yesterday's trades that I took yesterday morning. I actually took 3 trades on GBP, JPY and GBP USD. So just real quick, just check these charts, rather the orders that I took. Yeah, so as you can see, I got stopped out of all of the 3 orders. I had made my pre-market analysis. We actually discussed this with my fellow members on our WhatsApp group. We had analyzed the market. We knew that this week there was a probability for GBP USD and GBP JPY to go long, because we had identified an uptrend. So we were just waiting for it to go up and retest the third touch on our trend line. Unfortunately, the markets this week reversed majorly. So yesterday we had a huge sell-off on GBP JPY as well as GBP USD, and I'm suspecting it's because maybe the US economy, because US was when I'm trading GBP USD, GBP is the quote currency, rather the base currency, and USD the quote. So because of the recent elections in the US and the election of Biden as the president, I'm suspecting the economy of the US is beginning to improve relatively. So yeah, we actually incurred major sell-offs yesterday. So I actually took a loss in the market. So that's why I actually decided to create this video, and because this is something that you're going to go through as a beginner, or even as an experienced trader. You're always going to have those days when, or even weeks, when you've been consistently losing all your trades. So how do you deal with this? First of all, just know that losses are kawaida. It's a normal thing for you to incur losses. So every time, once if you incurred a loss, the first thing to do is just to get out of the charts, because at that time you have a bias. So for example, you may keep thinking that this market is going to buy when it's already in a sell-off, or the momentum is already going for a sell. So you're there waiting for your buy positions, and you end up being stopped out. So it's always advisable to just take a step off of the market. If you've had a losing day or a losing week, just take a step back, reanalyze yourself, make sure you've journaled all those trades, just know where you went wrong. Take a small break from taking any trades, go back to your charts and start looking at what you did wrong. So by doing this, that's why it's always very important to journal your trades, because when you're going back and when you're trying to revise the trades that you took, you're able to see how market was behaving at that particular time. Because the thing is, when you're taking a trade, you're not really certain how the market is going to go. But after the market has already formed, it is much easier to see what triggered a certain move, or what triggered or at what particular time did this particular movement take place. So I've actually noticed that most of the time when you're trading say an index such as NAS 100, there's usually a very huge momentum either to the upside or to the downside at around 4:30 p.m. Right now it's at 5:30 p.m. because of the I think daylight saving, but you always notice that there is a very huge momentum or movement in the markets during this particular time. So in case you were stopped out during this particular time, then when you go back to your analysis, you can be able to see what time this particular move happened and what triggered this move, what candlesticks formed when this move happened, and then you can be able to have a much more informed entry the next time that you're entering into the market. You could end up doing something we call revenge trading. Revenge trading, that is when you go back to the markets with the aim of making back the money that you lost. So you find most people, if for example the trades that I took a lot size 0.01. So I go back into the markets with a much bigger loss, so say lot size 0.02, 0.03, with the aim of being able to cover back my losses and be able to make some profits. And you realize some of the time the market does go against that trade as well, and you end up losing even more money or even blow your account. So advisable, do not revenge trade. If you've had a loss day, like today I haven't taken any trades in as much as the markets were actually moving as I was looking at them. But I just decided to stay off the markets, just recenter myself and know where I went wrong, not to chase the market, because fear of missing out is actually a very huge thing when it comes to trading. You might see a particular momentum and think, oh, maybe this is actually the move that is going to make back my money. End up taking a trade. Maybe you entered not a suitable place rather in the market. So you have a much bigger drawdown just in case the trade goes the other way. Your stop loss is set so far away from an entry. And if that trade again goes against you, then you end up losing even more money or blow your account. So stay away from the markets when you've had a losing day. Recenter yourself, reanalyze the markets, just go back to your charts, see where you went wrong. Make sure you journal all your trades, and to avoid those emotions or too much emotions, it is always proper to enter a trade when you've identified a proper risk to reward ratio. So if for example you have a small account, just make sure you don't risk, as I've always said in my videos, don't risk more than 2% of your account. So guys, I am hoping this short video has been helpful to you guys. And I actually have a Telegram group where I send my own personal analysis, and I've actually opened a concurrent group where people can be able to discuss. So if you're interested, I'm going to put those links in the description so that you can be able to join both the channel and the group. So if you have any questions in regards to trading, then just channel them there and I will be able to respond to them. So guys, again, thank you for joining. Please like, share and subscribe if you haven't already, and I will see you guys in the next one. Peace out.